Time for the market report. This month's supply and demand report is out.
That's right, and didn't make much of an impact. We'll get into all of it, but first, the numbers. What were the week's biggest gains and losses? And then, this month's WASDE. What did it tell us? And finally, in our row report, Dr. Will Maples tells us the WASDE's impact and the reasons behind its findings. So, markets closed the week slightly up. Both row crops and livestock split. Let's take a look. The week's biggest gain, sugar, up nearly a cent. That's almost a 5% increase from the previous week. The week's biggest loss, soybean oil, down nearly 2 cents. That's just over a 4% decrease from the previous week. This month's WASDE report recently dropped and made very little impact on the markets. However, it did shed some insight into several row crop stocks and trades on the international level. Once again, Bella Bingham has more.
U.S. wheat outlook is for more supplies due to heavier imports by about 10 million bushels. Exports from the U.S. are down by about 15 million bushels. That being said, ending stocks raised 25 million bushels, giving us stocks of about 820 million, up 2% from last year. Global wheat outlook shows supplies up by about 5.5 million tons, mostly due to high stocks in Turkey and higher production in Australia, Argentina, and Ukraine. Global consumption is also up by about 3 million tons, mostly on feed and residual use increases. U.S. corn outlook is unchanged from last month, and the season average farm price remains $4.35 per bushel. Global corn outlook has a bit more to say, with production up by about 3 million tons, most of that in India, Russia, and Ukraine. Global trade, on the other hand, shows reduced exports for Brazil and South Africa, while ending stocks lowered globally by about 1.5 million tons. U.S. rice supplies up due to higher imports, just like wheat, by about 1 million hundredweight, along with exports also up by the same amount, most going to Northeast Asia. Ending stocks unchanged and season average farm price $15.60 per hundredweight. Global rice outlook has no big changes. Supplies up slightly while consumption down 0.2 million tons and ending stocks down 0.1 million tons. U.S. soybean outlook unchanged as well. Season average farm price projected at $9.95 per bushel. Global soybean outlook a bit more interesting. Higher production in Ukraine, Mexico, and Australia, while crush also up by nearly 3 million tons. Exports unchanged and stocks lowered by about 3 million tons. U.S. beef production up due to heavier dressed weights, which is the weight of the animal after slaughter and processing, but before it's been broken down into cuts. Pork slaughter rate down, while broilers looking to rebound with higher placement and hatchery data. Turkey the opposite due to lower hatchery data. Egg production still down due to HPAI culling. Milk production also lowered due to less milk per cow despite a slightly higher herd. Cheese, butter, non-fat dry milk, and whey prices are also down. 2025 all milk price forecast $21.60 per hundredweight. U.S. cotton, much like corn and soybeans, has no changes to the outlook. Season average farm price 63 cents per pound. Global cotton outlook shows higher production for China, while consumption also raised for Pakistan, Bangladesh, and Egypt. Exports up for Brazil and Turkey, and global ending stocks down by 80,000 bales.
Now you have the context. What impact did the report have? According to Extension row crop economist Will Maples, not much at all. However, it did reveal a few interesting things to take into account moving forward, especially considering acreage.
Yeah, so we didn't see a lot of surprises in this WASDE. Not much changed whatsoever for any of the crops mainly, and that's typical for this time of the year. We pretty much have supply figured out. We're getting towards, pretty much halfway through the marketing year already, past halfway point for most of the commodities. So you don't see a lot of movement this time of year. One thing that was kind of surprising, though, is they didn't bump up exports for corn. We actually have pretty strong corn exports right now. Our weekly export reports we get, they're showing strong demand for U.S. corn. So it's kind of expecting USDA to maybe bump up corn exports just a little bit in the report. But for now, they've left it constant, but that'll be something to look at coming into next month. So they held a USDA Outlook Forum up in D.C. a couple weeks ago. It's kind of our first look from USDA of what they expect for this 2025 crop. And kind of as the market expected, a lot more corn and less soybeans. So we're looking at 94 million plus acres of corn from their estimates, which would be a lot of corn, estimating a record production of corn for the nation. It didn't have a really negative impact on prices because we expected to see a large corn number. So it'd be interesting to actually see in March when we get the planting numbers, whatever actual survey numbers of where corn acres might end up. Then on the soybean side, less soybeans, which is really needed with this market. We got a lot of stocks out there still. Not as bad as we thought they'd be back in the fall, but lower soybean acres is driven by those lower prices. All commodities have been a rough year, but cotton has really probably been the roughest. We're still 65-cent cotton. It's hard to make money in cotton, so as expected, acres is down. It's kind of surprising though. A lot of those acres we're expected to lose are more of those marginal grounds that go into our somewhat get abandoned more often than other acres. So actually production is estimated to be up from last year on these lower acres.
And that's it for a deeper look into the markets. Seems the price drama of the past few weeks has cooled a bit. We'll see if it comes back. In the meantime, word has it U.S. grains are beginning to upsell in the international market.